What's up, everybody? Alexander Fibonacci, the day trading champ. Now, guys, it's not often we get to see the king of bubbles speak up, Alan Greenspan. So, I want you guys to let me know, what do you think about his economic outlook? And, guys, it's a little hard to understand the old man. He can barely talk, but if you can somehow decipher what he's saying and you do know how to understand what the hell he's saying, he does bring up some interesting points to talk about. So, let me know what you think in the comments. What do you see happening to the markets? What do you see coming in long term in the next 10 years, 5 years? Let me know all that below, and I'll let you hear what he has to say.
Yes. It's great to have you back. Welcome back. We've not talked to you since COVID really became a phenomenon all around the world. And prior to that, you would come on and we would talk about demographics and pressures on social benefits, the risk of stagflation. Has COVID done anything to change that long-term view for you?
Yeah, well, I think that critical issues that we're dealing with are one, the coronavirus, on which we know very little, though we pretend a great deal. The critical issues that we're dealing with are the budget deficit and the entitlement programs, which are engendered by people who are retiring, and as a consequence of that, creating a demand for funds which affect the markets. So that my view is that we know a great deal about the level of retirement and therefore the degree of entitlements, and very little about the coronavirus, which we're guessing at. Conceivably, we may learn things about it as it go month on month, but I doubt that. But my overall view is that the inflation outlook is unfortunately negative, and essentially the result of basically the huge increase in entitlements that are crowding out private investment and productivity growth, which incidentally, not unimportantly, is slowing down to about a 1% annual rate.
So given that, given the lack of visibility on the coronavirus, given the demand for those long-term assets, how do you judge the Fed and the Treasury's initial response to the virus, and certainly now this new inflation strategy that we got out of Jackson Hole?
Well, all I can tell you is that what they are dealing with is a very unavailable issue, if I may put it that way. It's really, we are really dealing with the unknown. We can guess, we can hypothesize, we can hopefully go back on history and see how these things develop. And we will learn certain things, but not enough to give us a real insight into forces which engender stock prices, bond prices, or the like. And I think we do have a great deal of knowledge on the extraordinary increasing size of the retirement area, and we are, if anything, underestimating the size of the budget deficits that are down the road. So I would say, all in all, my major concern is inflation. It obviously hasn't emerged in any significant way as yet, but I think that's the area where I think our problems lie, and hopefully we'll get a new insight on the virus. We do know something about the virus in the sense that several weeks ago, the House of Representatives basically asked the Congressional Budget Office what their outlook was for what was the impact of the virus And they did something very clever. What they did is they took their January and February forecast, and then matched it against the forecast they would make now with the knowledge they have of the existing virus and its negative impact. And they essentially concluded that the impact was running at about 8% annual rate, which is very small in this context. And they're still in the area of guessing. So I'm not quite sure we're going to learn all that much from that area, but we have enough to worry about with the budget deficits which are crawling up behind us.